Hey, hey, Dripping Springs. It is Ashley and Bill for another mortgage moment. This is going to be our final mortgage moment of 2023. Bill, how are you?
I'm great. It's kind of good and bad. Well, mainly good. 23 is coming to an end. Let's get on to 24.
I'm with you, man. Like, let's turn the page on the calendar and move forward. I like it. So I wanted to just get your take on what do you think is going to happen in regards to the cost of money in 2024? Will we see more of 2023? Is it going to get better? Is it going to get worse? What do you think's coming up for us?
Yes, the $1 million question, as I like to say, because that's on everyone's mind, especially for us in the industry. 23 has been, challenging, so to speak. I mean, there's been a lot of obstacles. If you flip on the TV at any time, you can see what's happening. Interest rates have gone up from the mortgage side. Obviously, the federal interest rate has climbed this entire year. So it's been a struggle. Borrowing money is more expensive. That's just the bottom line. Meaning, less people are on the playing field to borrow money and want to do that. They might be stuck in this low rate from COVID. But the big thing is we've got some real good news from the Fed here in December, just last week. This is their final meeting for the year. It seems like the hiking has stopped, which was the big news that came out. No more hiking seems in the mirror coming forward. But the big thing is we don't know that. Obviously, we can't always say guarantee because they're very data dependent. What is the data going to tell us? What is the data going to tell us? But the data has been telling us that the economy has started slowing down, because that's another reason rates were going up, and the interest rates was because the economy was just firing away.
Yeah.
Unemployment was low, uh, and just so many things going in the right direction, where so many people, I think, in our shoes were feeling that it wasn't maybe all that, where debt's climbing for credit cards. We talked to our friends and neighbors. Uh, Jobs are harder to come by sometimes. It's just a lot of things we just doesn't line up. But now it's kind of all coming to fruition. So the big things that really line up that the Fed looks at are what inflation looks like. And inflation has been rising. Their goal is to hit 2%, and they're thinking their goal to hit that is in the next few years to get back down to that. The good news is it has been stagnant or even slowly coming down. So that's one big indicator of why mortgage rates are starting to drop some, which is great. This is what we want to see. The other thing is, and I like to say, or I don't like to say this, but bad news is sometimes good news in the mortgage world when unemployment starts ticking up. Because once unemployment starts ticking up, then they want to make things more favorable for people to try to still purchase things and houses, and that's why what the Fed decided, or talked about this last meeting, was they think the hiking has stopped. It won't be there. And they're also predicting and looking at potential rate cuts this year, which wasn't in the forecast the middle of 2023. They said maybe 3 rate cuts for the federal. And just remember, federal interest rate is not mortgage rates, but mortgage rates do tend to go in line with what's happening in the Fed and what's happening with the federal interest rates. So keep those in mind. But unemployment starting to tick up. I think after the holidays, the data is going to really drive the picture of it's time to kind of move things back down to where it is. We need people to start buying more things and getting back in there. It's just getting so expensive. I mean, I think you see too. We see what mortgage rates are. It's expensive to take a loan out right now.
Oh my
And
gosh, everything is expensive. Gas is getting a touch cheaper, but my gosh, that's very expensive. I make jokes every week about like going to the grocery store. Food is expensive. And I heard this analogy once around our economy that it had gotten so out of control that when you think of the economy as a patient, as a human, sometimes when you're in a medical situation, the best way to heal is to put somebody into a coma. And so it seemed like our government decided we're just going to put the whole damn economy in a coma. Like it's going to hurt and it's going to be painful, but that's the best way for us to heal, and give that time. But I think when they did that, they weren't quite certain how to pull people the human out of the coma
Right.
in a way that didn't start like off to the races again. So I think when we're hearing, maybe 3, possibly even 4 rate cuts coming up next year, we're like, oh my gosh, that's amazing. But if you're pulled out of that coma too quickly and that inflation spikes again, unemployment stays really, really low.
Mm-hmm.
I think we're at like 3.6% unemployment. Really, the target's 5%, which is like, that's millions of people. That's a ton of people out of work.
It is. Yes.
Yeah,
Yes.
you can hear about people out of work, but you hit the nail on the head. Sometimes bad news is good news for the cost of borrowing money. So I'm like, hallelujah, we're getting out of this coma, but I'm skeptical, and I'm like, well, wait a minute, don't go too fast now, because I don't want to go right back into the coma.
Well, yes, it was a good analogy, like you put it, and you're right. We don't want rates to drop too fast, because then we're in this predicament kind of with COVID. Is finally we're building up some inventory, I think, and what we're seeing now. But as rates, if rates drop too quick, then poof, it's gone. Bidding wars, it just gets challenging. So a slow decline could probably benefit a lot of us, but it can bring. We used to use, kind of say that every 1% that mortgage rates drop, it just brings another X amount of million buyers back into the equation. Where, again, if you're on the fence, rates are at probably the best they've been in 4 to 6 months from what it looks like and what it sees. So good signs ahead. And don't be caught off guard, because if you just keep waiting and waiting for these rates to drop, then you might be out of luck with that house you've been eyeing. But just kind of lastly is some predictions I've heard from people in the mortgage world, some of those experts out there. Remember, I'm not an expert. Okay. I handle money and can help people get loans and do my best to steer them the right way in every possible way I can. I'm just spitting out feedback that I'm seeing in the new, outlets that I follow on a daily basis. But some of the experts are saying we could see the low 5s, possibly high 4s, potentially by the end of 2024. If things are continuing to trend like they've been. So you hear that and you're like, oh my God, that's crazy. But I've heard that before, because we heard some of that last year. So again, take it for what it's worth. But the data is starting to show favorable trends, at least to get these rates back to some favorable terms for us to start seeing some more action and some more people out there back in the home buying game.
And those numbers aren't crazy lows. We saw the historic lows during the pandemic, but if you go pre-pandemic, like 2019, a rate in the 5s was really, really common.
Yeah.
So we're just retracting back to quote unquote normal. So I'm excited to get there. I hope that we get there in a responsible manner, so we don't have to repeat this cycle again. It's been so painful for our sellers sitting on market. Like, you are either a diamond or a deal. You have to be one of a kind, or you got to be a deal for people to jump on it. And we went from extreme seller market to not an extreme buyer market, but I would argue a buyer's market.
Yes.
Get balanced. Like, let's just get win-wins for everybody. Let's do that for a while. I think that would be so wonderful.
I agree, 100%.
Well, Bill, thank you so much, as always, for jamming on topics with me. You say you're not an expert, but you're my money expert. So I always appreciate your insight and knowledge. Wishing you and your family a very Merry Christmas and a very Happy New Year. So excited to take on 2024 in partnership with you. And thank you. Thank you for an amazing 23 in partnership together.
Yes, same to you, Ashley. And I look forward to 2024 and the good things to come.
Yes, let's get it. All right, guys, we will see you next year.
Yes, Happy New Year.